Do you change your view on where rates will be through 2018 after the comments from the President of the United States? Robert?
Not much, no. I mean, I think the Fed is a strong institution, and they have staying power. I don't think it's going to have a big impact on them.
Steve?
Not at all. We've had the view, Jonathan, that we're getting near the end of this rate hiking cycle. With inflation's not as difficult as it looks. We've been thinking the Fed has at least 2, but maybe 3 more hikes. I think, ironically, the president's now taken the focus off of the Putin meeting. Didn't go well. And he'll get credit when the Fed does what I think they probably are likely to do that no one thinks they're going to do.
Yeah.
And so, this is why the guy got elected president.
To comment on the Federal Reserve?
No, because he's a pretty good politician. The Federal Reserve is not going to react to tweets from the president. They don't need to.
It's a good point.
They are going to follow. He said it already. For now, for now, for now. How many times did he say for now last week?
Quite a few. Luke Kawa.
I think that's the point. I think the most people that'll be getting worked up about these comments are, around this table in the markets, academics. Yeah. I don't think there's a lot of necessarily popular support for the Fed as an institution. But also remember, George H.W. Bush, 1991 State of the Union, interest rates should be lower now. So that's a pretty direct, almost as direct as these comments, just delivered in a form with much more gravitas, I would say.
And when the Treasury Fed Independence Act was announced back in 1951, we saw Truman and McChesney Martin shortly thereafter go at it as well. So it's not the first time we've seen these kind of things before, Steve. What I will say, though, is that maybe independence is so solid at the Federal Reserve that this might not make a difference at all. Whereas in the 50s, when these sort of comments were made, people did think it changed Federal Reserve policy. You're basically saying, Robert, this time around, not so.
Well, I think we've come a long way, and we also have a new Fed chief, right? So this is somebody that has been vetted. They must be reasonably on the same page, that they want to see what is the potential that this economy has. And I think as inflation has moved very quickly up to target, and commodity prices are strong, the unemployment rate is low, what you've typically seen from the Fed is an acceleration in the pace of rate hikes. And this Fed has already shown absolutely no inclination to do that. And Jay Powell is showing every indication of being a pragmatist. So I think the market is assuming, they go a couple times, but then they're really, the burden of proof is going to really rise, and the Fed appreciates that. They don't want to break this economy.